Welcome. Let's learn a new concept called support and resistance. If you remember this picture, this is the depth of market that we saw on nseindia.com site of Nifty 50. As you know, buyers are on the left side, sellers on the right side. Buyers have casually placed their bid and awaiting sellers to sell at their price. Okay, now a big rich capital buyer who feels the price will rise in near future and he wishes to earn money. Current market price is at this line. He started buying the shares with very huge quantity. You should know by now that price will also rise as he is creating a demand by himself and sellers will be happy to sell him at higher price, right? With each transaction new high comes in and it goes up. Well, now he feels price has stopped and he wishes to book profit. He himself will become a seller and starts to offload the shares that he purchased at higher levels. Now price will start to fade down as he is creating a supply selling shares. Slowly the price has reached back to where it began. But this time it is different. The buyers who were on queue earlier trying to buy this share but failed to buy as price jumped due to that one big buyer. This time price came back to same zone again, right? Rest of the folks have a tendency to assume this particular zone where it took off earlier. It didn't happen randomly. There would be a reason behind it. So even though they do not know the reason, they feel the urge to buy it at least this time. Traders feel it has a magic zone and it can bounce up again. And collectively, buyers start to place bids in this price zone. Obviously, this creates demand. The falling price takes a U-turn and price starts to climb up. Voila. This, my friend, is called support, as there were a huge support from previous buyers along with new set of buyers who took notice of the price jump, expecting another up move from this particular zone. So what we have learned is called support in terms of market lingo. To identify a support, just on chart, you just look back into the historical price movement and spot the swing low. After mark the zone. This zone can be used for future price movement and we can take up a buy call based on this. Okay, now let's look in other part which is called a resistance. Say a big capital shareholder, she is looking to sell her shares. After certain period price rose to a high and she intends to sell at this level and does the offloading. Obviously she is creating supply which in turn makes the price fade down. That creates a swing high. The sellers who were waiting right above her lost their chance to sell their shares. Now say price returns back to same price zone. One thing is for sure, those sellers who missed their chance to offload earlier are all already waiting to sell their shares along with old sellers, fresh shorters which we will learn later, okay? They enter too. Together they create huge supply and price takes turn at the previous zone and moves down. This creates another swing high, right? So those sellers plus new shorters together created a barrier for the price which was moving up as they created supply. This barrier is called resistance. To identify upcoming resistance, look back in history, exactly the same thing, and look for the swing highs and mark those zones. There you have it. Both support and resistance, they are not an actual zone that prevails on chart. It is just an imaginary zone so powerful that every trader or investor's mixed emotion come on board when price reaches those zones. Those emotions being greed and fear, well, it is not hard rule that price will take turn as it is. Now there will be instances where it can be broken as well, like this diagram. Say the price been traveling as seen. Now we will try to identify the resistance. We draw a big horizontal zone, so the resistance has been identified. Let's find the support as well by drawing the zone at bottom level. Say this is support. We drew resistance with respect to swing high and we drew support with respect to swing low. Okay, say price went through the support due to excessive supply or seller. This broken support is no longer a support. It literally turns to become a resistance for future price movement. Let's understand why. Okay, the myth of support that everyone would be looking for: when price reaches the same zone, they expect it to move up, but this time for some external reason price fell down. Every buyer, those who bought, are stuck with shares that are bought at higher price. They would feel the fear now. They want to exit the stock as soon as possible. But stock is currently trading at lower price than they purchased, which is liable to give them loss. Say, the price again climbed up, but this time those buyers who bought at support zone level feels that price will drop again. Due to this fear, as soon as they get their buy level, they start to sell off to be a break even to eliminate their loss. This creates a set of supply which makes the price move down. Now consider other scenario where price went through the resistance barrier with a huge demand. Of course, it's just other way around. The resistance is no longer a resistance. It is a support hereafter once price is above it. The reason being, the shorters, again we will learn in later chapters, who sold at resistance are now stuck with lower price. They want to get rid of the short position. Say price comes back later to same level, shorters would get out of the trade. Other than that, fresh set of buyers feel that earlier resistance was broken with surge on price. They also feel it will bounce up. They bid at these levels, in turn both creates demand. End result being price turns at this zone and moves upwards. Okay, hence we can know support once broken is resistance and resistance once broken is support. So that gives us a good explanation why price takes turn at imaginary random swings or highs or lows. It is all about emotions of traders. Every set of traders who want to make money, which is the greed and fear of losing money. These two emotions give us the support and resistance. Oh yeah, and by the way, I forgot to mention the phenomena that change of support to resistance and resistance to support is called change in polarity. It's just a term, okay? Please don't worry about the terms. All you need to worry is about the visual pattern on chart. If you can identify those, you are good to go. Let's learn a new concept within same support and resistance regarding strength. S or R is support and resistance in short. Okay, we have a task. You are given a hammer and you need to break down the wall. Start to break, okay, by banging slowly. It will slowly get the crack and you shall see your progress eventually in a good way, like a small hole, say 5% progress, then a bigger hole, maybe 25% growth, and finally you will be cracking down to about 90% like this. Each hit cracks the walls slowly. At one point it would be broken and you would have completed the task, and I would appreciate, say, good job, and you finish the task. You can have drinks, cheers. You had the hammer and it took you time. Now let's say you got a jackhammer like this. You can break this wall maybe like within 5 hours, right? What about a jackhammer bulldozer? Maybe 1 hour job, probably, right? So in a strength manner, you can see hammer can be beaten by a jackhammer, which can be beaten by a bulldozer hammer. This is due to the strength of each individual object involved. Strength increases with their each aspect. The more the wall gets banged, the easier a crack turns to break. Another example is the Berlin Wall in Germany. It started to break down with people effort and they are moving freely now. So in general, this is all just example, okay? A barrier literally can be broken down by hitting multiple times on it. The same barrier can be broken down when there is strength pressured on it, and it can be broken down when huge effort is dropped into action. Well, I am considering both support and resistance as barrier in its own way. Support will be barrier for sellers and resistance will be barrier for buyers. When either party hits multiple times over and over, support and resistance can be broken. Okay, when the same party does with strength, it also can be broken. Okay, now let's look into the concept of support and resistance on a chart. Okay, so first thing first, we need to identify support and resistance. We saw the criteria. This candle is today's candle. Okay, all these candles are daily candle. So from today's candle, you are supposed to look back in history. Okay, on a history, if you want to look for support, you need to spot a swing low. Where can you see a swing low? Swing low is just a swing. It's just a real swing where it takes a turn. A down move happens and it takes a turn and goes up. That's the swing low. And the nearest swing low from this price zone that I can see is this zone. This is a swing zone, swing low. Okay, I'm gonna mark a support zone. How do I mark a support zone? Kindly note, it is really important to understand this marking. I have seen many people marking support and resistance as a single line. I disagree to that concept, because a support and resistance is not just a single line. I can draw a support line like this. It comes here, it takes a turn, goes. I can draw catch hold of the candle wick end and place a support line. This way I have seen with many people, but see, if that is the case, the price is 10551.72. That is the exact support line. Whenever the price comes at this zone, definitely if everybody is marking the same line, everybody knows this is the exact support, right? They would have placed the bid orders over here and it can simply bounce up, but that doesn't happen. One guy may plot support considering this candle and this candle. One guy may take this as one support. One guy may even mark this as his support, even this as his support. We don't know. If I give this chart to different person and they have different visualizing capability, so support and resistance marking varies from person to person. So that is why we need to consider all of them, right? Yes, you need to stack something in your favor. So that's why you need to mark the support and resistance zone in a peculiar fashion. It should be drawn as a big zone, not as a line. Please kindly take note of that part. Never a line hereafter, it is always a zone. So we identified a swing low, which is this. We are going to draw a a support zone. Now I'm zooming in completely. You all should know, I'm taking out this line as well. Okay, consider this candle. Okay, this white candle. You learned a candlestick consists of two parts: a body, which is this, and wick over here and over here. You get it, right? Now I'm just gonna classify the body into two parts. This is the upper body, because upper body is on the upside of the body. This is the lower body. and I'm marking the wicks in the similar fashion. Lower wick, upper wick. Okay, just go through the same thing again. If you don't understand, please just go through. This is really important. It's not just with white candles, even consider black candles like this or this or this. Pick any candle. For every candle it will, this upper will, this wick will be upper and this wick will be the lower part, and this portion will be the upper body and this portion will be the lower body. Upper body, lower wick, and a minor fraction of upper wick. Okay, so I just gave this concept to draw a support zone. Okay, so pick a swing low. Swing low needs to have three candles. Pick three candles. This candle has a low, and this candle is lower low to this candle, low, lower low, and higher low. Right? Do you get the picture? Low, lower low, higher low. This has equal lows, so no worries. You can take this one, low, lower low, higher low. So you need to have something like this. This represents swing low. And from current price, this price, look back into history to see the swing low. I can see this one. This is the first swing low. Just don't go into deep eye zones. Okay, the very first swing low, just zoom out and see this zone. If you see a swing low, that is the swing low. Okay, don't try to mathematically interpret, okay, I need to find every swing lows. No, if you don't see it, don't see it, because other traders will not be also not able to see them. You need to identify the swing low that every trader has interest upon. Only then you can stack a trade in your favor. So what I can see is, this is the swing low that I have in my eyes. Now when you draw, choose the rectangle, any rectangle, because every charting platform has a rectangle drawing tool. Okay, pick the rectangle. Now I'm going to pick the lower wick. I'm clicking it. Now if I just drag it, it will keep dragging like this. Now make the zone connecting your upper body. Now this coincides with the upper wick as well, but for every support, connect the dot with the lower wick to the upper body of the candle. I'm gonna draw like this and picking this. Now this would be my support zone. Now you can change the colors, of course. Okay, you can pick any color you want. Yeah, seeing this would be great. It's gray color. Okay, so this is my support zone. I just mark my support zone. Now I'm gonna mark my resistance zone. To find the resistance, 3 criteria: look back in history, look for a swing high. Where exactly do you see a swing high in this chart? Of course, this is a swing high, but the nearest swing high, we also see a swing high over here, right? Swing high can be found out by high, higher high, lower high. Get it? Just think. High, higher high, lower high. High, higher high, lower high. So again, To draw the resistance, pick the rectangle box, start from the upper wick. For resistance, use the upper wick, connect to the lower body and go across the current price as well. Now you have marked your support and resistance. It's that easy. Okay, do you see the zone? Now you can also draw this. I'm connecting the top wick and dragging it to connect the lower body. This is also a resistance, right? I'm gonna draw a support over here. Support, right? What is a swing low? Yeah, I can see a swing low at this junction. There is a swing high here, swing high, swing high. Let's mark them all for your easy understanding. Excuse me. This is the lowest low and I'm gonna go until here. Not connecting the top wick, I'm only taking the lower wick. Just drag it. Easy, simple. Get it? I'm gonna connect the top wick, lower body for resistance, drag it. Of course this resistance has been broken. This is based on the third view that you saw, and this made a swing high, and we drew the resistance based on swing high. Of course the price went up, 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 touched up, up, but it never crossed. It is within the resistance. This resistance is being respected by the price. It is not actually the price, it is respected in perception to the trader's emotion. Traders felt that, oh my god, this is too high, it cannot go beyond this resistance. They create a short position. Again, don't worry about short position, I will let you know what shorting is on later upcoming scenarios. Now I'm gonna mark this as well. Connect the dots, top wick, lower wick, lower body, connect. Now the swing over here, top wick, lower body, drag it. Here a swing low, swing low, swing low, swing low, swing high, swing high, swing high, swing high, swing low. Mark it. Mark it. Mark this. Mark this. So we can keep on going. On every swing low you can mark a support zone, and on every swing high, as like this, you can mark your resistance. I guess so far you understood how I'm marking support and resistance. I'm gonna remove everything. I'm just zooming out completely. Excuse me, I'm sorry. Okay. Now if you see, this is also swing high. Agreed? we have another swing high, but it is equal high. I'm gonna mark it, okay, and extend it. This is old Nifty, around 2008. The top is from 2008, and this top is from 2010. And we just learned the concept called, hammer, banging the wall, cracking the wall, right? So the same concept can be applied on zones, and the wall I mentioned over there can have resemblance to the zone. Now this is a resistance zone. You have, okay, I just marked it out randomly. I can fine tune it over here like this, and yeah, this should do it. This swinging high, it was a resistance over here. This is the first attempt of banging. This is the second attempt of banging. Do you see any other bangings? Yes, we have over here. Fourth attempt, fifth attempt, sixth attempt. This candle is a bearish candle, okay, and I will not consider this to be break of zone yet, because it doesn't show a bullishness over here. So I'll consider this to be a banging as well. So far it has banged 5 times, 6, 7, and it banged 8 times, but it went through. Now this price, this big bull candle, okay, a green candle where buyers trashed or cracked the zone, this is very important. On every scenario of zone breaking, you can get to know either buyer or a seller. They will be the winner at some point. This constant banging of these buyers, see, here it's just the beginning. Here also sellers won, sellers won, sellers won, sellers won, all these sellers won. They made the price to be below this roof or a zone. But how long do you think these sellers can keep holding? They can't hold forever. At some point they would be trashed out. So buyers won at this zone. And see, higher the number of banging by the buyers, greater the power to move up. It went up like anything. You get to see the picture. This is very much yearly candle. If I just switch to weekly, that would be fair enough. Yeah, this is much easier to understand, right? So here, let me mark this exactly as I suppose. Yeah, lower body and upper wick. Good. Great bang. Another bang, bang. Weekly candle closes above the zone, creating room for the buyers. So upon here, buyers just were in great demand. They wanted it so badly. They didn't even feel the necessity that they didn't even worry to pay the Nifty price, which was around 6,000. They were even ready to pay 6,800, 7,200, 7,600, 8,000. They even were ready to pay 8,800 at this point. When it neared 9,000, these buyers felt, oh my god, that's too much. I don't think Nifty is fair valued at this point. I would like to have it cheaper. So that's when buyers stopped buying from this point. The moment buyers stop buying, of course, there can be only winner who could be seller. So sellers come into place. They took over the market. From here, it came down, and you know that this is a downtrend. It made a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. See, it is a downtrend. Now that was a concept that we discussed earlier. Now I need you to look into the concept of change in polarity at this point. This was a resistance here. When price broke out and it started coming down, this is gonna be your support hereafter, right? Price never breached this zone again. It was a support. The same would be the case over here as well. Do you agree? Resistance, sellers won, buyers won, and this is a support now due to change in polarity. Now if you see, if you just mix the concept of the arrows that we just learned, making higher highs, higher lows, you should know. Well, let me finish it. Yeah. Now I'm just drawing this because this is a swing high. I can draw it, right? Where does it meet? Just look into this. You can see the exact polarity. Previous resistance broken by the buyers is gonna be the support, right? Look in this candle. It came down, it went up. It came down, it came down, it never breached the zone, but it went up. From here it took another high. Now I'm gonna mark this zone over here because this is also another swing high, right? Price broke here. Okay, it is weekly, right? So let me go to daily to see the good picture over here. It broke over here and it came down, but due to change in polarity, you should know that it is a support now, hence it moved up. So whenever price comes to a support, you know to buy, because of course the trader's emotion, it is an auto self-fulfilling prophecy. Like if price reaches support, it is a buy. This has been standardly inputted into every trader, even though they do not know the reason. If price reaches resistance, either to book profit or to enter a short position. This has been registered for like past 20 years. This can be seen on internet everywhere. But I just explained why this happens. You should understand support and resistance are the zones created by the traders themselves, their own greed and fear. It's their own earlier previous orders getting executed either with profit or loss. That's why support and resistance plays an important role in this course. You really need to focus on that. See, now things are getting into a good picture, I should say. Previous chapter, we just saw arrows being drawn as price waves. Now with respect to arrows, we can also see the picture of support and resistance. This arrow comes down, we need to buy somewhere over here, and where to buy we are gonna see on upcoming chapters, but you get the picture, right? Now let us see some examples of this. Okay, I'm gonna just remove all drawing tools. Let's go to the example. You all must have heard the company called Reliance. Who doesn't, right? Everyone knows Reliance. I'm gonna just zoom out, okay? Just look it over here, this period, okay? This is 2014. Don't even worry about 2014. Let's go back to way too earlier. See this zone, I'm just marking it randomly now just to get the picture. How many times did it test? 1, 2, 3, 4, 5, 6. 6 times? 6 times banging. Every time buyers took the price up, tried to preach no, the sellers were there. Here also the buyers tried to preach no, sellers came through. But at one point, the buyers just pushed the price up so hard that no sellers were even there. Now that's the power of buying, selling, and resistance and support. Let me just take a closer look of how I marked it. Yeah, I need to mark it in a good way. Now this is too big of a candle to draw. If I just take this itself is a big zone ranging from 545 to 570. It's too much. I'm gonna reduce it to half. That will do, because that itself is a big zone. How much is one? 555 to 570 price. Okay, that can be okay. Now it tested once, twice, thrice, 4, 5, 6, 7, 8. Okay, here 9, 10, 11, 12. Oh yeah, 13, 14. And see the 15th time, the price just zoomed out. See the big candle, the biggest candle I think ever seen on Reliance was this. And this was a buyer's day. And guess what? This was the day when Jio was announced. This particular candle exactly is the Jio day, I would say. So that's when this rose from 550 to 600. That's an awesome price. From there it went towards a high of 1000. Now the picture that I would like to show you, let me just show by drawing some tool so that what about this? Let's do it. Yeah, possible. Okay. Oh shit, sorry. Oh my god, come on, seriously. What am I doing wrong? Okay. Okay, it's not any tool, okay, don't worry about it. I'm just trying to identify how far this has gone. Okay, it has gone. Okay, I'm just trying to invert the picture please try to understand. It's nothing bad, it's just trying to invert the picture. You see the distance over here, it is covering the same distance over here. Yeah, I'm sorry, over here. Because I have okay, leave it. This let's keep this for some other day because I don't want to confuse you as of now. Sorry, don't bother about this tool. This is not a tool that I'm using. This is just used for a measuring purpose. Don't worry about it. Okay. Okay. Just understand this. It just banged the wall like 15 times in a row. It succeeded over here. It went or soared up so high. Don't you think the moment a stock that breaks out, the break of zone, consider over here, don't you think we can buy it over here 15 times? Just don't, just count 15 times it tried to break. It broke over here. Don't you think, why would it even go down? Even if it goes down, you have a concept called change in polarity. The max it can go is what? It can go till here. If it didn't work out, to the same support, because even if it doesn't go like this, it should at least do this and go up, right? Because it is a support. See, the time period from this support zone is, this is from 2009. Just check the period, the time period is over here. It's from 2009 till 2017, more or less like an 8 years, 8 to 9 years of range. Reliance been traveling or trying to break this particular 600 zone for like 8 years, and when it succeeded, don't you think it needs to get rewarded the same way? And it soared to 1,000 level. Get the picture? So not every breakout is a great breakout. When I say breakout, it means pierce through this zone, the zone that we just generated, the support or resistance. When the price breaches or breaks through that zone, it needs to have that respect. Say this Reliance price, try to break it 15 times. The more number of times it breaks, and when it gives a breakout, don't ever try to forget the stock. You have to keep in your watch list to trade, or even you can try to invest. Now this doesn't apply only to daily candle. You can do on weekly candle, hourly candle, 4-hour candle, 15, 5-minute, any time frame, pick it. The more number of price tries to test a particular zone, when it breaks, it's gonna be huge. Okay, now that's the concept of breakout, which I just revealed right now, but we will learn about in upcoming classes as well. Since it is about support and resistance, I just showed the scenario on how you can make the money. Let me give you another example that I traded personally. It's Pansali Engineering Polymers. Okay, this was during a period of, yeah, over here. This was something that I marked earlier. Now I am gonna just give you, look the picture. Okay, at that time what happened was only this much. This was the day that I got in. I'm gonna mark the zone over here till here. I need to extend it as well. Oh my god. Okay, how do I replay it? I don't know. Jump to. Okay. Oh, it's just a replay mode. Fine, fine. Okay. Yes, fine. I don't need this now. Okay, fine. This is a good feature. I think so. Now, why is it not loading? Oh my god. Seriously? Please come. Forget it. Okay. Now I'm gonna just extend this zone over here. Yeah. I'm going to the beginning of era of the swing high. This one. How did I mark it? Pick the upper wick, lower body. Yep, and that's it. We had this started from 2005. Okay, this zone had multiple tests. 1, 2, 3, 4, 5, 6 times tested over here, failed, and prices. Oh, come on, seriously. And 7, 8, 9, 10, 11, 12th attempt it passed. The more banging happens on a ball, the heavy strength in price as well. So this broke around, I bought it around 49 or 40, yeah, around 49 say it, and it just stayed for some days and it started to move up like anything. The concept of support and resistance, it's just simple support and resistance. I'm gonna show you the resistance over here that generated, and it broke out, extending it. See the importance of upper wick and lower body that I'm creating. Price came down, bounced up again. Now it started its journey. I booked the profit on the result day. Result day was around November, I think so. This day, I think so. Yeah, this gap was the result day. Okay, forget about gap. I will teach you about that gap later. Around 130 zones, just say 130 zones, I booked my profit. And just imagine, it's a huge return that I received. Let me show you how. This is a tool to measure your buying and risk capacity. My investment was around 55. It came around to 138. I got like 185 percentage. Say 180 percentage was my reward overall. That's a huge reward. Okay, it's not silly one. Another thing that I traded was Sakuma exports. Okay, these are old. Okay, just remove. What happened over here was, this was near to Bansali Engineers share. I mean, I took the trade around that time only. Okay, I'm marking the zone. The mark of zone you should know by now. I considered upper wick and lower body for marking resistance. Test once, twice, 3, 4, 5. This went up. I bought around 85 or something. Okay, but price came down a little bit. This is the change in polarity that happened. I added little bit more inside this zone. I purchased it here, added some more over here. My average was around 78. Now I will uh, introduce or explain these concepts in upcoming classes, but I'm just giving you the glimpse of just mere support and resistance that gives a big advantage. Okay, it took the support over here, this resistance turned support, and it just started to climb up, and I couldn't enjoy until this much. I just exited over around 130 or 135 because I felt that it topped out, but apparently I was wrong. My trader's perception was okay. I got a return of 1x times, so I think that's fair enough. So let me exit, and it was doing this zigzag movement sideways for some day, and then it started a big boom. Now you can see marking the resistance over here, swing highs. It boomed with a good amount of buyers. Of course, this ignites another wave. Of course, you should know by now the wave formation. Okay, I am swing this. Just look into the wave forms. If you get the picture, I need you to look into this. I don't have the need to draw this, but at least try to picturize what I'm trying to say. When I say wave, this is what I mean. Connecting dots of swing highs to swing low. When you have series of higher lows and series of higher highs, it is an uptrend, and when you see such big candle breaking the previous swing, it has a potential to make a new high. That is an opportunity for you to enter the trade, and definitely it made a new high to 280 rupees. It started out from 175, went to 280. This is also a good return, but nobody can pick tops and bottoms. I should say that nobody can pick a top and a bottom. Only series of people can do that. I'm sorry, not series of people. Only the institution guys can do such magic, because they are the people who feels okay, we are gonna buy 1 lakh quantity or 1 crore quantity of the shares, and they are the low makers. If they feel the need to bring the stock up, they can definitely with a snap of fingers, because they have the capital power. When I say institutions, you should know those are mutual fund, hedge fund, banks, and other big brokers, players. Okay, those are the guys. And yeah, pretty much I think you just got, yeah, okay, this is another respecting support. It came down, it respected support, it went up. Do you agree? Now the current price is over here. You can elongate this. Okay, it's been tested only once. You can expect it to test again as well. But if you see series of tests on a single support, price can eventually break the support and go down, because the longer you bang on a wall, it gets weaker and weaker and weaker, right? So the more test, the more easy to break. Single test, okay, it has the strength to take it once more up, right? And this is a resistance zone. Okay, now there can be times when it doesn't even make sense. See, I just marked this. It didn't break this zone. Okay, this white candle did not break any zone, it just came down, it tested. This candle is a bluff candle. Okay, there will be sellers who no, support and resistance is a game, is like more like a casino gameplay. The house versus the players. See, when institutions they want to dump the shares, say 150 lakh of quantity of shares, they cannot dump in one day, right? They will need time. Every day 1 lakh shares, 1 lakh shares, or 5 lakh shares, because they need other guys to enter the market. I shouldn't say all this at this point. I don't want you to confuse it, but still I'm saying the institutions create the hype. Let's say, I don't know this event, but let's say Sakuma export travel from here to here. It is on resistance right now, and it's been roaming here for quite some time. Now, based on the scenario that I taught you, the more times it bangs, definitely it gets weaker. It became weak. I agree to that. But no trading perception is 100% right. See, it banged like couple of times over here and it soared up. But it did not move, or it did not give the expected move. Sometimes such events also happens. And regarding the institutions, the thing that I stopped earlier, if they are in need to dump the shares, they can do it by hyping the company through media, blogs, forums, money control sites, ET markets. The media can simply hype the stock to grab the attention of the retail traders. They will start to buy, and whom do you think the retailers will be buying from? The only big seller. The only big seller would be the institution. If they want to dump 50 lakh of shares, they need 50 lakh of shares worth buyers, right? That much quantity has to be traded to some other, I would say, fool, because institutions need money. They always need money. They don't end up in loss often. Okay, only retailers like us end up in loss. I learned this a hard way. Okay, I'm just teaching you the right way on absorbing all this. As a beginner, I was also a stupid person, following the media and following other advisory stuff, which I ended up in a loss. But now I'm a steady trader. It took me a lot of time and a lot of mistakes. Even during my beginning phase, I used to see other experienced traders on forums, and they used to tell trading is not for everyone. Even if you enter to make money, it doesn't happen overnight. It takes at least 2 to 5 years of experience with constant mistakes that you can learn upon. And I thought, no way, how can a person can make mistakes for 2 to 5 years constantly? I mean, how is that even possible? So even I was that arrogant to absorb what they said. But now I understand, after series of mistakes, it's not just once or twice. I made mistake like 6 times, 7 times, blew up my account. But now, yes, I am capable to earn money. It took me a lot of effort. I'm sorry, we just moved away from the topic a lot, and I just shared my view. Okay, so we will learn about each topics in upcoming chapters. You just came across only 20% of what the course is supposed to meant, and we have a long way to go. And this is one such thing. So far, you have learned price action in waveform. Price action after waveform, you learned higher highs, higher lows, which is uptrend, then downtrend, then sideways trend, now then swing highs and swing lows, which led to support and resistance. Now you know the more time wall gets banged, and when price breaks that zone, it is a very good buying opportunity. And yeah, pretty much it, and we can see on the upcoming chapters to look upon. Yeah, right. If you have any doubts or feedbacks that to be told, kindly email me at backspacetrading@gmail.com. Thank you for choosing the course, and congratulations coming so far. Okay.